Hello. In this video, we'll be going over the IRS Interactive Tax Assistant that helps taxpayers determine whether or not they or their spouse can claim part of a tax refund that is being applied towards a debt owed by the other spouse. This is also known as injured spouse allocation. And there is a distinction between injured spouse allocation and what is known as innocent spouse relief. So the interactive tax assistant, makes a statement up front that this walkthrough does not cover innocent spouse relief. So an innocent spouse is someone that filed a joint return but believes that the tax should be paid by the other spouse or the former spouse because that person omitted or purposely or erroneously reported income, deductions, so on and so forth. And the innocent spouse is claiming that either that he or she did not know what the other spouse was up to. This is common in things like domestic abuse cases, and it goes down a completely separate path from what this is talking about. Injured spouse allocation means that if you married someone that has a previous debt that can be offset, so with a tax refund. For example, student loan debt, certain state payments such as unemployment assistance that is owed back to the state income tax, and child support are the most common types of debt that are subject to what is known as Treasury Offset Program. So the Treasury Offset Program authorizes the Department of Treasury and specifically certain agencies such as the Internal Revenue Service to take part of a tax refund that a taxpayer may rightfully own and then allocate that towards that past due debt, for example, child support. So injured spouse allocation indicates that, hey, I married into this and you're taking my tax refund to pay this other person's debt. And the Internal Revenue Code does not allow the IRS to do that. You have to file a form basically requesting the injured spouse allocation, saying this is the amount of our joint tax return that was allocated to my income, my situation, and you calculate the amount of that refund that you should have, and then the IRS will process it and give that money to you. So this tax assistant simply walks through the necessary steps to determine whether or not you're eligible for that program. So let's go ahead and begin. So we're going to select the 2023 tax year. Have we already filed it? Well, so no, we've not already filed a tax return. We are filing as a married couple, filing a joint tax return. And are you expecting this to be a past due debt owed by you or your spouse for one of the following: federal tax, state income tax, unemployment, student loans, child support? So who owes the debt? Well, if you owe the debt, you can't request injured spouse allocation, but if your spouse owes the debt and you're not liable for it, now the IRS will ask whether or not you were in a community property state. For this instance, we'll say no. Will you report payments such as federal tax withholding or estimated payments on your joint tax return? So in this case, you would be able to claim part of the refund that's being applied towards a debt. So you file IRS Form 8379. It'll take about 14 weeks, maybe a little bit less if your tax return is filed electronically. If you're filing a paper return, write injured spouse on the upper left-hand corner of page 1 on your tax return. And then that will flag your record that the IRS needs to process a Form 8379. So let's go back and select yes to see if things are different for people living in a community property state. In this case, not really, but special rules might apply when you go to calculate your injured spouse refund. The IRS will use your state's rules to determine the amount, if any, that would be refundable to the injured spouse. So let's talk about a previous tax year, because we are filing in the 2023 tax season. Let's talk about maybe a 2021 tax return. So are you amending this tax return? Because if you're not amending it, is your status married filing jointly? Yes. Was it for a past due debt? Who owed the spouse? All of the other facts are going to remain the same. Let's just see. Well, let's change the community property state. Reported payments. You can claim part of the refund. You would mail a copy of your Form 8379 to the IRS Service Center where you filed your original return. You would attach a copy of all your W-2s or any W-2Gs, any Form 1099s that showed with federal income tax withholding. And it'll take the IRS about 8 weeks to process your Form 8379. So if you filed it originally as an electronic return, you would mail it to the IRS center for the area where you live. And you can find that. It's by state. Simply Google IRS Service Center for whichever state you live in, and the IRS will probably pop up as the top search result on Google. So a couple of that's about all we have for for this walkthrough. We'll put links in the show notes to both the injured spouse allocation and the innocent spouse relief articles and videos that we've created, just in case you stumbled upon this by mistake. We'll still get you to the right place if you're looking for innocent spouse relief. We'll also put links to some of the articles about W-2, W-2G, and certain 1099s that might have federal income tax withholding. So a couple things I like to point out. Anything that's in blue, you can always click on it and it'll point you to a page where it shows the IRS definition of that term or phrase. So on a joint tax return, both you and your spouse would include all of your income, exemptions, and deductions. You can close out of that and it'll take you right back here. The second thing is, I always encourage people that if they're using the tax assistant tool to to guide them in a tax decision, then they should print out the review screen. You print it out, you go over it, you make sure that it doesn't have any mistakes. If it does, I would recommend that you clear the screen, you start over again, erase all the cookies, and you go back through until you're satisfied with the answers. And you'll keep this in file in your records, especially if you're doing this for a prior year tax return, just in case you're audited. And then you can show the examiner your due diligence, the work that you did. And if you made a mistake, you may end up paying tax and interest. But what you're looking to avoid is any perception that you just took a frivolous approach, that you want to avoid any accuracy related penalties, anything that really kind of indicates that you didn't care enough to do what was expected of you. Like you just didn't care about the return, or you're trying to get out of paying taxes. Anything that is in that examiner's mind, you want to make sure that they come away understanding that this is an honest mistake, and you pay the amount of tax plus interest and make things whole. So we'll put links in the show notes to any of the forums that were mentioned here, and if you like our YouTube channel, please subscribe. If you have any questions, comments, or if there's anything that I can help you with a future tax topic, please hit me up in the comments section. Thank you very much and have a great day.